Happy Saturday, everybody. Welcome to another and this week's final episode of Market Update, where we discuss leading financial and economic developments in Europe, Asia, and North America. My name is Tony. Let's jump in. And we begin in North America. This week, Nvidia Corp briefly crossed an unprecedented milestone, becoming the first company in history to reach $5 trillion in market capitalization, before retreating modestly in Thursday trading. Shares of the Santa Clara-based chipmaker climbed 3.1% to reach the milestone on Wednesday, capping a breathtaking rally driven by unrelenting demand for artificial intelligence technology and CEO Jensen Huang's aggressive global deal-making spree. The landmark comes just 4 months after Nvidia first broke the $4 trillion barrier, showcasing the sheer pace of investor enthusiasm around AI. With a 54% surge this year alone, Nvidia has single-handedly powered nearly a fifth of the S&P 500's 17% advance in 2025, cementing its place as the defining stock of the AI era. Its valuation now outstrips the combined market worth of nations such as the Netherlands, Spain, and Italy, making it larger than all but 5 of the world's stock markets: the US, China, Japan, Hong Kong, and India. Nvidia's rise reflects Wall Street's conviction that AI will transform the global economy. Quote, a $5 trillion market cap would have been unimaginable a few years ago, end quote, said Keith Liner, chief market strategist at Centrist Advisory Services. Quote, the market is certainly putting a lot of stock into the idea that AI will be transformational. End quote. Of course, these sort of comments have come as red flags to others who warn of similar euphoria in the lead up to the dot-com bust-up at the end of the 90s. Nvidia's Huang has boosted his optimism through a steady stream of announcements, partnerships with Nokia, Samsung Electronics, and Hyundai Motor Corp, a new system linking AI chips with quantum computers, and projections that Nvidia's latest processors could generate $500 billion in revenue. The company's meteoric ascent has also made Huang one of the richest people in the world, with a net worth exceeding $150 billion, up $68 billion since the start of the year. Nvidia's gravity is reshaping the entire technology landscape. Microsoft, Alphabet, and Meta platforms, 3 of Nvidia's biggest customers, are pouring staggering sums into AI infrastructure. Together, they spent $78 billion in capital expenditures last quarter, an 89% year-over-year increase, mostly on data centers and GPUs. Microsoft's spending hit a record $34.9 billion as demand for cloud-based AI services continues to outstrip capacity. The CFO, Amy Hood, admitted that despite enormous outlays, the company still, quote, can't meet current demand, end quote. Alphabet reported similar momentum, with Google Cloud revenues rising 34% to $15.2 billion, and its Gemini AI assistant now boasting 650 million monthly users. Capital expenditures could reach $93 billion this year. Meta, meanwhile, spooked investors by warning of sharply higher spending in 2026, signaling AI spending which could top $100 billion next year. Shares of Meta tumbled as much as 14% this week, the company's steepest drop in 18 months. The CEO Mark Zuckerberg defended the splurge, saying the biggest risk lies in underinvesting in AI, and floated the idea of selling excess computing capacity if needed. Even as Wall Street analysts remain overwhelmingly bullish, over 90% rate the stock, that is, Nvidia's stock, a buy, some caution that the company's valuation may be running ahead of reality. And indeed, with the wider industry, there is a general concern among some commentators that are warning that if there is a bubble, it would be like the dot-com crash on steroids, as these technology companies are so heavily weighed to major indexes and so exposed to AI investment. Google, Meta, and Microsoft spent almost $80 billion over the past quarter alone on artificial intelligence infrastructure. Others are cautiously optimistic, however. Nvidia shares may be up more than 1,300% since 2022, though they now trade at a multiple of 34 times estimated earnings, below the 5-year average of 39. Quote, if what everyone is betting on with AI comes to fruition, valuations are probably justified, end quote, said Dan I of Fort Pitt Capital Group. Quote, but it really is priced for elevated expectations. End quote. For now, Nvidia's momentum shows no sign of slowing. As the world builds ever larger data centers to power AI's next wave, the company that makes the chips at their heart stands alone atop a $5 trillion summit. Its rise both a symbol of technological revolution and a test of how far the AI boom can go before gravity sets in. Next up, we move to Europe. The Netherlands may be heading toward a period of renewed political and economic stability after the centrist pro-European Democrat 66, D66 party surged in Wednesday's parliamentary election, nearly tripling its representation to 26 seats. The result, which puts D66 level with the right-wing Freedom Party of Mr. Wilders, is being welcomed by markets as a sign that Dutch voters have turned toward moderation. With Wilders' party effectively isolated in parliament, D66 leader Rob Jetten is now in a strong position to form a centrist coalition, an outcome that analysts say could steady both investor confidence and policymaking after years of gridlock. Quote, Dutch bonds are likely to outperform their German counterparts after election results showed reduced support for the right wing, end quote, said strategist Van Ram. Quote, the outcome could herald some political stability, something the nation has lacked in recent years, end quote. The Amsterdam AEX index has risen almost 9% since late August, closing the gap with its European peers, while the yield spread on Dutch 10-year debt versus Germany remains near a 3-year low at 15 basis points. This reflects investor optimism that a D66-led government will pursue pro-EU fiscal discipline and pragmatic housing, migration and environmental policies. During the campaign, Jetten placed the housing crisis at the heart of his platform, calling for major new construction efforts to tackle soaring prices and shortages, policies that could invigorate domestic investment and employment. ING's chief executive said a swift coalition deal would help sustain confidence. Quote, we hope the coalition will be formed quickly because that's important for the country and for investment, end quote. The timing of political stabilization coincides with unexpectedly strong economic data. Dutch GDP grew 0.4% in the third quarter, its fastest pace this year, powered by exports, household spending and increased government outlays on healthcare and defense. Quote, this is actually quite a good figure, end quote, said the Statistics Netherlands chief executive, adding, quote, if growth continues at this pace, it implies a solid 2% annual expansion for one of Europe's most advanced economies. End quote. With household spending more and inflation pressures easing, economists see scope for sustained growth, provided coalition talks conclude swiftly. As one commentator put it, stability is the best investment policy the Netherlands could deliver right now. Next up, we have one more development to cover in Asia, but just quickly, if you're getting some value from today's episode, it's a huge help if you can just hit that like button, and if you'd like to continue to be on top of updates like these, consider subscribing. And finally for today, US President Donald Trump's whirlwind visit to Southeast Asia earlier this week produced a series of trade announcements his administration has hailed as historic. Yet beneath the triumphal language lies a patchwork of uneven agreements with limited immediate benefits for the region, and plenty of uncertainty about how they will play out. In Kuala Lumpur, Trump unveiled deals with Malaysia and Cambodia and frameworks for future accords with Thailand and Vietnam. The pacts promised to remove many US tariffs and open the door to billions in purchases of American goods, including semiconductors and aerospace equipment. However, Southeast Asian negotiators walked away without the tariff relief they had sought. Rates of 19 to 20% on exports to the United States remain intact in most sectors, and exemptions for Malaysia and Cambodia are narrow. Economists were quick to highlight the imbalance. Quote, these are one-sided deals with clear costs and vague benefits for Southeast Asia, end quote, one Goldman economist noted, warning that they could threaten local industries already struggling under broad US trade tariffs. Barclays estimated that only about $1 billion, 0.2% of Malaysia's GDP, of its exports will actually enjoy zero tariff access, despite headline figures suggesting far more. Markets reflected that skepticism. Malaysian equities slipped after a muted reaction to the news, while the currency barely moved. Still, Kuala Lumpur announced several side arrangements, including a mutual understanding on currency policy with the US Treasury and commitments by Malaysian firms to buy nearly $150 billion in US technology and aerospace goods. Analysts said the scale of such obligations raised concerns. Quote, the counterparties are agreeing to do an awful lot of difficult things, removing tariffs, aligning on US policies, and in exchange for what? End quote. Asked Deborah Elms of the Henrik Foundation. Quote, this is a bit of a puzzle, end quote. One obvious answer is you get the privilege of access to the largest and most dynamic market in the world. Now that the previous liberal world order is fragmenting into blocks, there is now a much more pay-to-play dynamic at work. The geopolitical backdrop looms large. ASEAN has now surpassed China as the US's largest source of imported goods, even as the bloc deepens trade with Beijing through a newly upgraded free trade pact. Vietnam, already a major beneficiary of supply chain shifts away from China, stands to gain the most from Trump's overtures, though details remain sketchy. For Southeast Asia's export-driven economies, any easing of US tariffs offers short-term relief, but as HSBC's Frederick Newman observed, the cost may be steep. Quote, purchase commitments and the removal of import barriers for US goods might bring some relief, but at a price that underscores who truly holds the leverage. End quote. Okay, that is today's episode of Market Update. Thank you so much everybody for watching. Have a good Saturday, have a restful weekend, and I hope to see you for a new week of updates on Monday.